And we should be live.
Welcome back. Episode
Yep.
9. What have we got for this week? I'm Dion, this is Lewis, and we are together Invest Interest, rounding up the weekly news topics that we think are relevant to financial markets, maybe talk about something that we've got a particular interest of this week, and then we'll do a couple of reviews, maybe of a book or some sort of university degree, something that we think you can invest time into, to get some sort of benefit.
Fair. Solid intro. Right.
In such a cool way as well.
You covered it all there.
Easy game. Right, so let's just jump straight into it. Let's go with the week ending of this past Sunday, so the 21st of July. What have we got?
So we're kicking it off with some brain hacking. Elon Musk's company.
The brain hack. Elon Musk's new company. I can't remember what the company's called. I'll just click on this link and it'll open it up for me. It's called...
Probably biotech or something like that.
Essentially... Yeah, somewhat correct that. But what I remember reading is
Neuralink.
that they've essentially developed Neuralink. That's the name of the company.
Yep.
It's, what is it? It's some kind of like microfiber electrodes, I guess, that they can basically stick into your head that's supposed to then improve how they can register brain patterns, sort of detect diseases like dementia and how you could fix that sort of damaged brain pathways.
Yeah,
it's
so
still
I think
in early days.
Yeah, it's very early days. It's essentially just a newer version, that's a lot less invasive than traditional methods to monitoring brain activity. I think I read somewhere they've done it to a monkey.
Yes, they have. They've got a monkey to actually control a computer, just for its brain. So that's obviously massive steps.
Yep, that's great.
And if they're doing that now, a couple of years time, who knows? But I still don't think it's going to get to the point where you can actually download your brain capacity onto a computer hard drive. I think that would just be completely crazy.
Yeah.
And then there's a whole ethics behind it as well, which opens up a can of worms.
I don't know. Well, I don't know what his. Well, he says his ultimate goals are the future. Elon Musk's envisions a future of superhuman cognition. Wow, that's a mouthful.
Yeah.
That's the ultimate goal. But in the meantime, I think they're focusing on patients with severe neurological conditions. So,
okay.
Yeah. So it looks like they can attach up to 3,000 electrodes and monitor activity of 1,000 neurons. So I guess it's just, newer technology, and they're just kind of...
It's newer technology, but I definitely think it opens a new market with regards to the current sort of pharmaceutical and biological technology that you've got. Obviously, you've got drug companies that provide cures to certain diseases. You've got other various stuff, such as prevention techniques. You've got equipment that you can sell to hospitals. This is sort of now like, it's a software in it, so essentially it's a different sort of market that's going to open up. Because now you can have, essentially, you could maybe have companies that are developing software in order to aid the brain function, as well as aid it and then treat it. So it's combining the software and then the actual technology, the hardware to actually get it into your brain to be able to imply the codes, I guess.
Well, I don't know if it's going to work.
I'd say it's a new market. It's definitely going to open a new market, that's for sure. It must do.
Well, yeah, but I think at the minute, the possibilities that we could see is he's going to be kind of gathering a lot more data, and then what people decide to do with that data will open up the market then, because as new information becomes available, people think and work in different ways. They can write software to analyze information or monitor or whatever it be. Yeah, it's definitely going to be an interesting developing technology. And I guess, why are we interested in it?
Yeah. I think what I was trying to say is that you've got your traditional sort of drug companies like AstraZeneca. Is it Johnson & Johnson over in America? There's a certain drug regulation companies that produce the physical stuff. What I'm saying is, do you reckon we're going to get some
biotech,
Silicon Valley startup biotech specifically like aimed at just this, not software manipulation, but software strategy in order to map out the human brain, I guess, is what they're ultimately trying to do to begin with, and then from that they're going to try and do the tweaks and twerks.
Yeah, I
So
guess
do you
it's
reckon
like
it's going to
a
be
pharmaceutical
the big com-
technology company, and I guess it's Elon Musk's the first one to market, I guess, with this type of
yeah?
technology.
So I guess things in terms of like the big companies will probably move at a lot slower pace to take notice of this, and then you'd imagine that some emerging companies from Silicon Valley or whatever it is with regards to the software code and might spring up really quickly
Yeah,
just to get a piece of the pie, and then the larger, massive conglomerates might suddenly turn up a bit later.
probably.
So,
It
yeah.
depends though, doesn't it? Because I mean, I guess there's the bio or biological side of it. There's the pharmaceuticals, which are like kind of the effects. So I don't really know how the market works, to be honest, but it's essentially a product that has an effect on the body, whereas the software
hmm
stuff could probably work the other way. Like
Yeah.
it's not like it's I don't know. It could have all sorts of
It, it,
possibilities. It's
it,
mind
it,
blowing,
it
really.
basically opens the door to all sorts of stuff,
Yeah,
doesn't it?
yeah.
Yeah.
So I guess
Because then you might
that's
need
interesting
viruses.
to us. I guess our main reason for talking about that news would be it could open up a whole load of new technology markets to invest in.
Yeah. Well, it could open a new market completely, couldn't it?
Yeah,
Because you can have enhancements, or you could have treatments, you could have virus protection, you could have all sorts of stuff that could potentially become a lucrative market for anyone that's willing to take a risk, I guess.
yeah. So I guess we're just mentioning it now so that in 5, 10, or 15 years we can jump back and reference this
Can
point,
jump back
this
and go, oh,
conversation.
look at the punter now. Yeah.
Yeah,
Right. So next we've got the electric car boom with regards to European car manufacturers and the UK car manufacturers. Um, so they seem to be doing quite well in Europe, but from what I understand, the sales are quite flagging in the UK market, and down to the last quarter, they actually receded a little bit.
yeah.
So the technology has obviously improved. You can get nearly 200 to 300 miles per charge now. I think the main problem with regards to the market in the UK is the infrastructure.
So there's two factors that probably um, caused that decline in this last quarter. So yes, there's a huge problem with the charging infrastructure in the UK. And
Mm-hmm.
secondly, the government offered a grant of up to £4,500 if you bought an electric vehicle. So you got that off
Right.
the list price of the vehicle. Um, so obviously, depending if it was a full electric, you'd get the full kind of 4,500, and if it was like a hybrid, you'd get a little bit less. But they've tweaked that, or they tweaked it about 3 months ago. So you
Okay.
actually get a lower, I guess, subsidy or a lower grant.
Right.
So
You got to cough up more money yourself.
yeah, so it's obviously the price of the vehicle hasn't changed, but the cost to
Yeah.
the customer has gone down. Sorry, the
Mm.
customer has gone up. So
Yeah.
yeah, so I guess that's
So
obviously
yeah,
impacted that.
I think yeah. So I think if they really want to push this through, they need to definitely improve the charging points and how they're distributing them across the country. But then do you look at this as really a solution to the global warming issue itself, or do you think this is just the next step, and then we're going to eventually end up in the hydrogen economy where that's essentially a much cleaner technology than a battery, which is just moving the energy cycle from gas at the pumps to energy being burnt at the power stations, which is still going to produce a hell of a lot of CO2, and especially where cutting down on all the amount of power stations that we have in the UK, and then the rate of the new power stations that we're building, whether it's nuclear or something else, are just so slow to progress that if everyone suddenly switches to all these electric cars, the grid's just not going to be able to cope with it.
Yeah, so I guess there's like three different topics to talk about there. Yeah, you're right with the final point is if everyone woke up tomorrow and switched to an electric car, the national grid would have a huge problem trying to deal with
Mm-hmm.
that. Um, I think the other thing there that you mentioned was um, moving kind of obviously the gas at the pumps, or certainly the global warming or the particulate issue that we have in cities. It just gets moved to the manufacturing plant or the coal plant or nuclear plant, wherever it is. But I think that's one of the main drivers, is that city air has got so bad that it's causing health issues, that actually switching to electric will solve that problem. And it's only kind of a quarter or a half step in solving the actual global, because these things to manufacture, certainly the battery technology at the minute, is very energy intensive.
Yeah, for sure. And then precious metals aren't exactly cheap either.
No. So that's what I mean. Like, to collect all the metals, you're producing all the greenhouse gases. To actually process them, manufacture them, and then ship them to where they need to be constructed, all that is very energy intensive, producing lots of greenhouse gases. So all it does is it moves it from, like, the gases being produced in the cities to being produced further afield.
Outside. Yeah. And there's also the argument that you could use renewable resources to produce electricity as well in that front.
That would work for... it doesn't really help the manufacturing of them, does it? It'd work for charging the vehicle. So actually, the lifetime of the vehicle might see a reduction, but the manufacturing cost may, or the... I don't want to say cost, but the manufacturing impact would still be the same, if not worse.
So it's definitely got room to grow, but it needs criteria in order to... It's got certain checkpoints and goalposts, really, hasn't it? You don't want people to take it all up instantly because the infrastructure's not there and the grid can't take it. And then we'd probably also have a problem with regards to supplying the energy needed in the power station to produce electricity. So it's going to grow, but steadily. And then I generally think that hydrogen's probably going to end up coming around just by the point we've got this up and running, and then everyone's going to be like, no, hydrogen now. And then they'll invested all this infrastructure and all that money into that, and it's going to basically be like pointless.
Well, yeah, there's other risks around hydrogen, but if that is the technology, then we'll get there eventually, I guess. You need everything else to catch up.
True. Should we go to the next topic? So the next topic we picked up was, we mentioned a couple of weeks ago about the potential millions of job losses by 2030 due to AI taking over manufacturing jobs in a typical sort of plant system. The UK now has actually pledged to retrain these people who potentially might lose their jobs to AI in basically new skills that they could then use to get better jobs, I guess.
Yeah.
So it's a step in the right direction, I think, but I don't think it's anything new. I think they've been doing this sort of scheme just for different results, maybe, in the past. It's been brought forward to work with AI.
Yeah, I guess it's seen as an issue. A lot of factory jobs getting shut down because of automation and Brexit, but that's another topic. And then, all these people are out of work, but what are the government doing about it? And I guess that news announcement and that training program, however they choose to set it up, is kind of their response to that. So it's their answer to it.
Yeah. I read an interesting comment on the article that we read. So I wanted to point out is, do you think that the company should then still have to pay, for example, if they're replacing a worker with an AI robot, should that AI robot, or should the company pay the tax and the national insurance that they would have initially paid the human worker anyway, but not the rest of his salary, right? Because then the government's still taking money from that, and it's almost, the company's saving money, but it's still contributing tax, even though it's made its process more streamlined. And then that can go into then reskilling the people that have lost their jobs to AI.
I mean, arguably, if the person who the AI replaced, let's say it was just a 50 grand a year job, then that profit from that should be seen or realized by the company, which would result in more tax anyway. So I don't know. It's well, maybe there needs to be an alternative tax, like an AI tax. I don't know.
Yeah, well, you can get a big tech tax, can't you? So why could you not have an AI tax in order just to put some money back into retraining these people's livelihoods that could potentially upset?
Maybe.
It's something that definitely could be looked
Yeah.
at. I just thought it was an interesting comment, and I thought, yeah, I totally agree with that one.
Yeah, it's a very valid comment. I don't know how it would work in like
Yeah,
a practical sense, but yeah, it's something would be useful.
it's something that needs to be looked at. I think there's definitely some tax incentives that the government could rake in some money from.
How would that
But
work then if like a small company is set up but with lots of AI technology, but then obviously never employed a person? Would
wait,
they get? Because then it's almost
well,
like
I didn't. Yeah, they've never employed someone to get rid of. Yeah, I agree with you there. They shouldn't have to pay it because they've already taken it into consideration before they started the business, and they're not having to lay off anyone with
but
improving
then that
technology.
decentivizes
Uh,
the other company to, well, that's the opposite of what capitalism is.
I don't know. Is it desensitizing because they still don't have to pay the person's wage, so it'd still be cheaper for them. They're still going to make more organic profit. It's just they're not going to make as much organic profit if they didn't have to pay tax and
That's what I
national
mean. They
insurance.
might as well just keep the employee rather than invest in AI.
No, no, because they still have to pay his salaries, right? Right. You only get taxed what 20%, and then your national insurance is about 10%. You still got to make up the rest of his 70% of his salary to pay him.
Yeah,
You know what I
yeah, but
mean?
that's like the reason to replace or the driver behind replacing or using AI to let's say it's a job that's quite a dangerous job, or it's a job that's got lots of gases, or like it, I don't know, something that could harm the human. Um, like if you had a
Sack of meat, human.
harm the human. Um,
It's just the way you said it, casually said it.
well, I
The
didn't want to
human.
say him or her or
No,
whatever.
just said
It's a human being, right? He or she or whoever that person is a human.
dude.
So anyway, the AI replaces them to make the process safer. Um,
Yeah.
like, why would why would you then tax them for that? Like,
Well, they're not. It's not that they're getting taxed. I mean, you could say, oh yeah, why would you tax them for it? Or you could say, well, you've just saved 70% because you don't have to pay
what if
the
it
worker.
costs them
His
70% or even more to implement the actual AI
it's
system?
saved. Yeah, but that'll pay itself back within a matter of seconds, won't it? Well, not a matter of seconds, but a matter of X amount of buyback. You'd take it into consideration for your capex costs
Well,
or your
let's
opex
say it
costs.
was 15x, so like it take 15 years to pay back.
Well, that'd be for one robot, right? But if you've got 15 robots instead of 300 people, then suddenly it's going to improve and it's going to go up by X-fold because the person's productivity is probably minuscule compared to what a
Well,
machine's
that's just all ifs
productivity is.
and buts. Like the cost of no, because the cost of the
Uh,
machinery
I think,
could be hundreds, millions. Yeah,
yeah,
like
you're not wrong, but we're getting into theoretical analysis now, and I think we should probably
yeah. Let's
stick
just
to,
move it on.
yeah, just move it on before we start arguing.
Well, I think we could just yeah talk about that all evening and not get anywhere because it's pointless.
Yeah,
It's a very valid idea. I don't know how it would work
yeah,
practically. Yeah.
right.
Right.
Next topic. Are Britons going to be sacking off their summer holidays due to the poor exchange rate? And when I say sack off summer holidays, I mean, going abroad to Europe, for example, or America, and because the pound to the dollar and the euro is so poor at the moment, they feel like they're not getting a good bang for the buck, and they'd rather just stay at home. Now, what sort of knock-on effects do you think that'd have?
Well, it's almost like a double effect, isn't it? So like the pound's so
Yeah.
weak, it costs you more to get there, and then when you're there, it's like everything's more expensive compared to what it used to be.
Well, I was more thinking about companies, so I was looking at airlines in particular. I'm thinking if there's less traffic there, then their profits are going to be getting
Yeah,
hit.
definitely.
So whether you could take that into consideration now and maybe short against some of the companies, particularly Thomas Cook. I know they're in the doghouse at the moment with regards to some of their financials, and then I think they were considering a 750 million pound offer from a Chinese company. So if there's going to be more weakness for them, then some of the other airlines might struggle as
Yeah,
well.
I'd agree with that.
And then obviously you got you've got the other knock-on effect as well. If more people are staying at home, do you reckon more people are going to end up down at the pub, and then you're going to have your pub stocks that are going to increase?
Yeah, so like
For
hospitality
example,
is like, or even just holidaying in the
Weatherspoons.
UK.
Even just holiday. More people are staying at home, but they're going on holiday in the UK, and they're spending the money in pubs and stuff like that. So it's something that you might want to think about, take a look into consideration.
Definitely. Yeah, I wonder, like, how would we monitor that? Like, how would we keep a track of that to see if that is actually in effect going on?
I don't think you're really going to be able to do that unless you look at the quarterly results from the companies that we've just mentioned there, for example, airliners and pub and hospitality services. I think you'd have to just almost make a hedge.
Yeah, I know that, but like if, let's say we look back in this, or think about this conversation in 6 months' time, like, is there any way we could look at the figures and...
I don't know about digging into it. I mean, you could probably look at how many people, what's the word? Airport footfall. You could probably look at that, see if there's any websites there that track that sort of information. I mean, you might have Heathrow that says, oh, we have X amount of million passengers coming through each month. See if that has a dip, is a live feed. It just depends how much you want to dig into it and how much research you really want to do. But you could definitely invest some time in it. I just think if you would know, it'd be difficult to grasp a starting point. Like these figures for air travel are going to be in the millions, and they're probably going to vary by a good factor depending on which source you use. So if you just want to make a general assumption and say, right, less people are going to go, so price of the Thomas Cook, for example, is going to drop because it's summer and they're not getting any business, right? That's arguably their strength, their most busiest time of the year, and they're not getting the footfall, so it's just going to generally go down. Then make a guess on that.
Yeah.
It's estimation. I mean, yeah, it's based
speculation,
on,
isn't it?
No real figures, but more just speculation and trying to think what general population would do in this situation.
Yeah. I like it.
Yeah.
It's good thinking. Yeah, good logic.
You like it? Yeah, and sometimes it is just trying to think in a logical sort of way. If this goes up, this might go down, or if everyone does this, this might go up.
We could just try and check in later and see what the kind of... I know there's a couple of different pubs in the... Oh, I don't know what they're called, but is it like JD Weatherspoon
that
Group
could be
or something
worthwhile,
like that?
Yeah, definitely. Maybe we could pick 3 or 4, and then just track them for a couple of months during the summer, and then just see how it goes down.
Yeah.
Right. Should we move on to the next one?
You love talking about oil.
So, I do love talking about oil, and we are back again in our favourite Gulf, which is the Persian Gulf. So last week there was not really much news, nothing really had gone on, and then over the weekend it all seemed to have kicked off once again. So from what I understand, there were 2 British tankers, two British flying flagged tankers that were going through the Straits of Hormuz, and they have both been, seized, occupied by the Iran Special Forces. One of them was let go, and the other one has basically been taken into port now, and basically Iran are refusing to give it up. So now they have a tanker, the UK has a tanker. A lot of people are condemning what Iran done, saying it's piracy, this, that, and the other, but the Iran has said, well, you took one of ours, we've took one of yours, so eye for an eye, blood for blood, what are you going to do about it? And I think Iran are really starting to up the pressure and up the ante, and I think escalations and tensions are definitely getting higher. Like, you think the situation 3 or 4 months ago when we were just talking about, I can't even remember what the starting point was, 2 or 3 months ago. The initial ban on the Iranian oil not being able to sell. Their economy is obviously hurting because they feel like they have to defend themselves now, right? So they're up in the ante. America's obviously not going to like this. They've also claimed that they shot down a drone this week, although Iran had deny that. So he is slowly starting to rise. Oil didn't jump as much as I thought it would do. Over the weekend, it went in at 62 and 50 a barrel, and then this morning, it's opened up at around about $1 up. So I was expecting a bit more of a jump, but it really depends now. I can't see how the UK and the rest of Europe can stay in that Iran treaty deal for the nuclear deal, especially when Iran have openly said, look, we're exceeding the stockpile limits now and we're enriching it past this amount. What is the benefit of the rest of the countries remaining in that deal when America are now going to say, well, we told you this would happen, and then now it's happening. So that further strengthens Trump's hand into saying that, right, we should definitely not go back into a deal with Iran. and then the Iranians are feeling that hostility, and they're saying, well, we're going to defend ourselves. I don't know what's going to happen next. It'd be interesting to see, because I think the UK are sending another warship over there
for monitoring purposes.
So there's going to be more, there's going to be more protection for the tankers, and then Iran could see that as further hostilities, right? And there's only a certain amount of times you can get sparks before a fire starts. So I don't know what's going to be the catalyst. If it's going to be a catalyst, I'd like to think that they could settle it through words and diplomatic relations. But the situation is definitely, the ante is definitely getting upped each time. And if it does go to war, then like we keep saying, oil is going to go up a lot, because a fifth of the world's oil production comes in and out of that narrow 21-mile strait. So
it's interesting though, because weren't there some negotiations going on last week? Didn't we?
There
was meant to be.
There were talks about it, because you mentioned Jeremy Hunt was talking about, well, what if we give you a tanker back, perhaps we could get that UK journalist that's currently imprisoned over there, and then maybe we could get everyone around the table again to discuss a new nuclear deal. That's probably not going to happen now because they've seized a tanker. So I think it's back to the drawing board, and then obviously we've got the new Prime Minister, which is going to be announced tomorrow, coming in. So it depends how much of a hard line Boris or Jeremy Hunt wants to lay down and say, right, Iran, we can't let you get away with this piracy, or we can't let you get away with this. This is what we're going to do. And then, I don't know. It's certainly making things interesting with regards to the oil front.
I guess, keep an eye on oil, and if you can get involved and buy.
Gotta keep an eye. It's not keep an eye on oil. It's just keep an eye on the Gulf, I guess, really, and see what's going to escalate there.
Good stuff.
Right. Should we crack on with something else then?
Move it on.
That's the week.
That's the weekly news,
Weekly news roundup tomorrow, like we said. Yeah, the new Prime Minister. Interesting times. Who's your money on? Bojo?
I think he will.
Not interested?
I think he will get it. Boris Johnson.
Bojo will get in, and I think it'll be an early general election coming up because of it.
Probably.
Right.
Before we jump onto your presentation, do you want to talk about the portfolio performance?
You want to do a review of the portfolio performance, or just a little chart that we've got in the bottom left?
Yeah, just talk about the chart. What does it mean? Why have we got it there?
A little chart. So this is just something that we've just thrown up there. A nice little, I guess, visual representation of how our skin in the game is getting on. So between us, we have about 13 stocks, and what we're going to try and do is put up the best performing 3 and then the worst performing 3 of the week. And if you want to have we can have a discussion, I guess, between them.
Well,
so obviously up at top spot number 1.
Why the hell is that one performing so well? And
why is Americia? So that's Americia. These are oil and gas exploration and production company in Colombia. They are listed on the AIM index, and the fall as you can see there, if you search that into any search engine or a stock exchange platform, you will come up with their company. So last week these were dribbling around at maybe 12.5 pence. And I told you maybe 4 or 5 months ago that you want to buy this stock because for the precise situation that we now find ourselves in. So at the end of the 19th, I do believe it was, the company has basically come out and said, right, we're going to enter an auction period and a serials period now. So people and companies are going to come to the table, throw some offers down, and hopefully we're going to have an auction series where each time it gets bumped up more and more and more. So from that, just that initial announcement, it's jumped up to, I think it was around 17 pence. So that's pretty much responsible for a solid nearly 48%. I think it actually finished 48% up as opposed to 38% there for the week. So more news on that. This morning they informed the market that they initially had a bid last week from a French outfit.
French company,
Yep. So they threw down a 17p offer. They basically had 12.5p in cash reserves. A cash payment, and then 4.5p's worth of their stock. The board have basically come out and said, no, you're only valuing our company straight away at 200 million, which we think is massively undervalued. We're just going to straight up reject their offer. So the company's got several assets. It's got they're roughly producing 5,000 to 6,000 kilobarrels of oil a day in a couple of wells in Mariposa and a couple of blocks in Colombia. I think their main important strategic asset is the OBA pipeline. So this transports, at the moment, around 5,000 barrels of oil a day, up to 50,000 it can do. And it pumps it from Colombia over the border into Ecuador and then up into your sort of ports and your stations up there. So it's a massive strategic benefit to have this. Now, there is some massive majors in Colombia at the moment. You've got Occident Energy, which is an American company. You have a massive Indian ONOC, which is Indian Oil and Natural Gas Exploration, I do believe. They're over there as well. And so what happened before this bid came in is that a couple of blocks that Americio had, they've sold 50% stake to the American, I'm going to butcher these names, Occidental Oil. So they sold 50% to them. They funded a well program and they were going to do all the seismic data on that. So there's 50% of their block over there. They have another 30% ownership in a different block with the Indian Oil Company, and they hit massive oil with regards to a well called CPO-5. So when I told you to buy them, they were around about 16 pence. It jumped up to 20 after the news of CPO-5. Yeah. And this was before oil was currently around in the trade range that it is now. The thing that dropped it down to 12, they had one duster well, which was an exploration well in the Carlisle area. It didn't perform as well as it wanted. That knocked it down to 12. So this initial first bid at 17p seems pretty weak, and I think it's just a low ball offer just to get the ball going.
First offer, isn't it? Yeah.
It's the first offer, yeah. And I think the period's going to be open for a few months, is this. I think the board have got a lot of skin in the game, and most of their averages are around 20 pence, 25p. So they're ideally not going to want to let it go for anything less than that. So I think another boost of confidence today is there was quite a lot of institutional investors. So these are hedge funds, these are your management funds, taking like a 3%, between a 1% and a 3% stake in the company. So basically buying up the shares that everyone, I think it's an easy book. If someone else is going to come in at a bigger bid, then the institutional investor is going to say, well, it's coming by an extra 10%. There we go. We made some easy money. Let's accept it.
Yeah.
So because they're jumping in, and the price now finished today near enough 18 pence, which is a full penny above the 17%, not 7 first offer came in at. I think you're definitely going to see some more fireworks in the coming.
Yeah, I just
keep look at.
Sorry, mate. I just need to interrupt you. Yeah. So I lost your connection for a couple of bits there. So I guess a quick summary is, it's a full penny up from where it was last week, and it's about 5p up from where it was the week before. Is that right? You still there?
So no, it's initial bid that the company threw up. Can you hear me?
Yeah, got you.
Hello?
You're just very behind, that's all. Yeah. I'm not sure what's going on.
Very, very bad. Hang on, then let me know
you're
when
coming
you can
through
hear me
clear
properly.
now. Yeah.
You're coming through now. So yeah, the lowball bid was last Friday after they initially opened it up to market of 17 pence. And as I mentioned, a lot of institutionals have been getting in today over that price. And it's finished today at 18p, which is obviously a penny up from that initial bid after it got rejected. So if they're still tankering in now at 18p, then obviously they deem to have quite a bit of upside still potentially with regards to companies that can come in and buy.
Yeah, so the next offer should hopefully be above 18p.
I think it's pretty safe to say that the market is expecting an offer that's going to be higher than 18p. And did you catch the bit where I said quite a lot of the board of directors have skin in the game?
So obviously,
so they're going to want to make a profit on this as well, and I think most of them is in the 20 to 25p range. So I would expect. So the other thing to mention is that the current broker that they are doing the sales with, they did their net asset valuation and they said they reckon it's around 37 pence.
37.
So it's just about 37. So that's a solid 20 pence more than the 17p that we've just had today. So it's definitely one to watch over the coming weeks. It's exciting times. I've had this in for a while, specifically waiting for this situation. It's just been there dribbling around, but now we've got some action. I'm definitely looking forward to seeing how it all plays out.
Fair.
So the other two on there, we've got Pennon, which is just a UK water utility company. That's just, I mean, you could say that's just daily variance, really, with a pretty much 1% change for the week. Taylor Wimpey is a UK house builder. Again, 1%, you're pretty much looking at just fluctuations. A lot of that will depend on, well, you won't get any major movements on Taylor Wimpey until Brexit's sorted out and we know what we're doing going further forward with that. Worst performers of the week, we've got Hurricane down at 14%. So there's a lot of news coming out with Hurricane. I think the main reason why this performance is pretty bad for the week is because so initially they had the market capital day. They said that their well they've got online now is producing excellent amounts of reserves and producing a decent level. No, they said exceptional level. The thing that's dropped it recently is one of their institutional investors, which were Kerrigan Capital Markets. They dumped I think they dumped around 50% of their holding, so that's down now to maybe 4 or 5%. So they've basically freed up a lot of shares to the market, and then that's just dropped the price down. So that's the main tank for this week. But I'd imagine it to jump back up anytime soon.
Fair enough.
And then Cirrus, I guess it's just
market
typical
fluctuation
variations in the week, and same for Powerhouse as well.
Okay, then, man. Got loads of people sat in the chat.
Anything decent you want to put out?
I think someone said you look like Donald Trump.
I look like Donald Trump. I'm not orange enough to be Donald Trump. Let's get that straight. I need to work on the tan a bit.
Just trolling. Just trolling. Yeah, man. Okay, what do you want to jump on to next?
Well, do you want to go on to that topic of the week? Or what?
So you've put us together another little presentation.
Me talking again, isn't it?
It's always you talking.
Always you talking.
I'll interject with some questions. Yeah. Fair enough. Okay then. So what's the presentation on?
So the presentation this week is going to be on premium bonds.
Fair enough.
Have you you know what a premium bond is, don't you?
You did give me an inkling of what a premium bond was the other week.
Yeah. I did because we were chit-chatting about it, and then I decided to make a topic, and I thought it was quite easy. There's quite a bit of information out there. It's an interesting topic, I guess, if you're into lotteries and potential major winnings, if you got a little bit of cash to spare. Right, should we crack on with the first slide then, Matt?
Yeah, man. Yeah.
So if I just give you a bit of background on what a bond is. So a bond is effectively an IOU loan. So you'll have two types of parties in an IOU loan. You'll have the lender, which provides the borrower with the required capital now. In exchange, the borrower will pay a fixed interest rate throughout the bond's duration before repaying the initial sum of the bond as it matures. So just a few facts about bonds there. Bonds have a fixed time period. I mean, they can be anywhere from 1 to 2 years. They can be up to 25 years as well. You do not own part of the company with a bond. The company are essentially indebted to you, or perhaps it's the government that you've got a bond with. Interest is typically received annually. It is a method for raising capital used by companies, governments, and councils. It's usually considered a less riskier market than equities, and bonds can be grouped together, and they can also be traded in the market. So that's just a bit of a background on the bond there. If we then move on to what a premium bond is, which is the next slide.
Yep.
So a premium bond is a type of lottery bond. Instead of receiving a fixed interest payment, the bondholder is entered into a lottery with a chance to win various prizes. So a couple of facts there for you. Yeah, it was created in 1956 by the UK government National Savings and Investment Agency. So it's varied throughout the years, but currently the bond has an interest rate of 1.4%. And it's worth pointing out that this is not paid directly to the individual. The bond does not mature. Cash prizes are all tax-free. So whatever you win in the lottery, presuming if one of your numbers get paid out, everything you collect there is tax-free. You don't have to pay any tax on that, which is obviously an incentive there for some people. Each person can hold a maximum of up to £50,000 worth of bonds. Prizes are distributed monthly. The highest prize is £1 million. The lowest prize is £25. Bonds must be held for 1 calendar month before they are entered into the draw. So as I mentioned there, the 1.4% is not paid to the individual. It's basically collected into a prize pool. So yeah, the interest accrued from each bond is collected into a large fund where the money is then divided into a number of cash prizes, which is then distributed to the winning bond number holders. So each pound worth of bond you have is given a unique number. And then at the end of every month, the winners will be selected out of the vast number of bondholders and bond numbers that there is. And that will be distributed out from this prize pool here. So yeah, the figure on the, well, I say that the diagram on the left shows how the interest is collected all into this big prize pool. And then it's distributed out to the bond winners there. The little table there on the right is an indication of some of the prize values you can get there. As I mentioned, the lowest is 25, highest is 1 million. The frequency of, well, the number of 25s is a lot higher than the number of millions. Usually now it's around 1 million prizes each month. And then the £25, I think, is maybe 3.6 million £25 prizes given out each month. So yeah, it's just a bit of a perspective there.
So how many
it's worth
people,
pointing out,
like, well, how big are these prize pools then? Like how?
I think at the moment there's around 70 to 75 billion pounds worth of bonds.
Right.
So the prize pool's probably around 100 million with regards to how much they distribute it out.
It's quite a lot.
So yeah, just a little there. Number of available prizes is dependent on the size of the fund. So if, for example, the amount of people buying bonds keeps going up and they get to the point where they're doing 100 billion, you might have 3 million £1 million prizes each month.
Fair enough. Yeah.
Yeah. So how do you win? Each £1 bond is assigned a random number. If your bond number is selected, you have one of the prizes. But who randomly picks the prizes? So this computer program was initially developed in the 1956. It's based off the team. Do you know the team that worked together in the Second World War to decode the German messages that they basically cracked that allowed the Allies to win the war? It was basically this electric random number indicator equipment was basically sort of constructed in that same facility and basically using that same sort of principle. So naturally, as the amount of people purchasing bonds has increased because its popularity increased, there's more numbers and there's more calculations that the computer had to do. So gradually it took longer for the computer to select the winners each month. And it probably went from maybe a couple of hours up to a couple of days at some point. So over the years, they have had to improve the computer system, which is called ERNIE.
Right.
So now I think we're on generation 5.
It's a microchip.
Obviously that can do it's a microchip. It can do 80 billion random numbers calculations in a matter of probably minutes or hours. Just for thought there, which is pretty impressive. It's pretty crazy, really, as well, when you think about it.
Well, it's kind of cool that it's born out of like some old tech, but then kind of modernized as well.
Well, it was new tech for the time, but now it's a quantum computer as opposed to a hard drive, right?
Yeah.
So let's go on to is it worth it then? So the NS&I website itself has stated that the chance of winning any prize with a £1 bond is 1 in 24,500 chance, right?
Yeah.
So that table there basically sort of gives you an indication of how likely you are to win that designated prize. So statistically speaking, if you have the full 50,000 allotment of bonds, you should win on average twice a month. However, remember, this is a lottery. It's not guaranteed. So it's worth taking into consideration there. The chance of winning the 1 million each month is roughly 1.34 times 10 to the power of minus 6. So just for perspective, the chance of winning the UK lottery is 2.22 times 10 to the power of minus 8. So yeah, you got a better chance of winning the 1 million each month, but it's still pretty unlikely. Assuming you win the £25 prize twice each month, which is a lot likely, as the £100 and the £50 both only have a roughly 1%. The annual yield for your bond would be 1.2% there, which is obviously less than the interest rate that the bond is advertised at 1.4.
Yeah.
Obviously, you could win big prize one month. I mean, if you won the million, then congratulations to you. You've absolutely lucked out, and you're walking away with a fat profit there. But the chances of that are, well,
very slim. Yeah.
Very. So there's a couple of, I guess, who should really play. The people who probably are most likely attracted to this sort of stuff is people who like the chance and the romanticism of potentially winning big.
Okay.
A good thing is you don't actually lose your initial stake like you would do with the UK lottery, £2 to play. You still keep the bonds each month, even if you don't win. It just carries on rolling over.
Oh, right. So you've got a chance of winning like every month, is it?
Every month, yeah. Every month your numbers get drawn out, but it doesn't cost anything.
No, but like you don't have to buy additional bonds. Your same holding kind of gets re-entered every month. Okay.
Yeah. You say basically the numbers when you buy the bond, you get allocated that number, and that number is yours until you. And so that number is always entered each month, right?
Yeah.
So it's also quite attractive, I guess, for people who have maxed out their tax ISA for the year, assuming that you can do that quite comfortably, which obviously at the moment we're nowhere near. Because obviously, saying that word a lot, but your tax ISA is full. You don't want to pay any tax on anything else with your investments, so stick your money in there. Premium bonds. If you win big, then great. You don't have to pay tax on that anyway. And if you don't, well, you can just take your money out and then put it into your tax ISA
the following year.
Fair
enough.
Yeah. So you could still potentially make a little bit of money, providing you could put quite a lot in premium bonds. But if you're only putting £100 in, then chances are you're probably not going to make any sort of return at all. Which then dribbles down to the next point, which is who should play. Well, if you're not seeking consistent returns, then this game's probably for you. But if you are looking for maybe a monthly income or some dividends or a more consistent sort of return of investment, then premium bonds is probably not for you. It's more of a novelty, I guess. It's more of a lottery where you never really lose, but the chances of winning are very, very slim.
Yeah.
Like you can always take out what you've put in. So yeah, that last point in there. People who normally play the lottery, you might as well play premium bonds because you don't actually lose your stake, and you still have a chance of winning some decent money.
But also a chance of not winning like anything at all.
Yeah. You've got not winning anything at all, and your £50 at the end of the year could still be £50. You can also buy gifts. Big gift bonds for people. So if I wanted to buy you £100 worth of bond gifts, I could buy it and basically transfer it to you.
Okay. How does that work with the? Did you look at how that works with estate, like gifting? Is it still no?
I didn't delve that deep. But for example, I think a lot of people from the baby boomer generation could probably gift their grandchildren premium bonds.
Okay.
I think a common sort of like gift at Christmas or birthdays. Do you know what I mean? So I guess that's all I've got. Have you still got me?
Yeah, we've still got you. We're still live.
Good.
Thanks for that. Anyway.
Any questions? You said you were going to intervene. You can't just left me hanging with regards to rattling it all off.
No, I was listening. It seemed to make sense. I was obviously I asked you about the taxation, but you didn't really answer that one. Yeah, I guess I don't know. It's not something that I'd heard of before. So like, I don't know. Do you think that's a good thing to invest in? Like, personally, would you invest in that?
I had some premium bonds when I was quite young, maybe 16 to 18. I'd been gifted some from my grandparents as well because I didn't really understand about investing. I think it's potentially a doorway for people to get gifted them, for example, from your grandparents, and then be like, oh, cool, what's this? And then you look into it a little bit more, and then it opens up the whole world of investing, and suddenly you realize that, maybe this isn't the best place to stick on money. I think it's probably a good starting point for some people, and for a lot of people, it probably is their first dabble into investing. It's very popular. I mean, 80 billion bonds worth is not a small figure, is it? Really?
That's humongous, isn't it?
So it's definitely it's a great way to get your feet wet, I guess, but it's not really consistent. And going forward, we're always talking about compound interest being king. This compound interest is not really guaranteed. It's more luck based.
Right.
So for me, I personally wouldn't put any in there unless I could max out my ISA each year and then stick some in there just because I've got nothing else to do with it. I don't want to get any taxed on any capital gains or any dividend tax elsewhere.
Yeah, but I guess if you're not
So that's
making
what I
anything in there, well, surely there's other means to maximize profits or
Yeah,
maximize
true
your
for sure. But
investments. Yeah.
if you still getting the 1.2% because you win your 2 prizes every month, then great. You know, you've made 600 there.
Yeah, fair enough.
And then when you get into the numbers game, the more you've got in there, the more chance you have of winning.
Right then. Well, thanks for that.
No problem. Hope I didn't bore too many people too much.
No, I enjoyed it. I always enjoy it.
Yeah.
Yeah. Do you want me to talk about what the hell went wrong with ETX then?
Oh, yeah, mate. Let's get started with that one because that were an absolute fail.
Yeah.
I think I lost the bet, though.
Well, I mean, it would. Let's start off with the amount of time that it actually took. So I think I set up some graphs. I spent about 2 hours doing that. And then you probably spent a similar amount of time setting up some graphs on the ETX platform.
Yeah, it was a bit of a faff. It took me a while to get my head around certain sort of stuff, and you can't save the settings you want and just transfer it to another graph. Well, you might be able to, but I didn't figure it out.
Yeah, so there's like a steep software learning curve that we both really struggled with. I guess the other thing was that the account with ETX is only active for 2 weeks unless you're investing your personal money or actual real funds. So we obviously both kind of spent 2 hours and then lost everything in the 2 weeks. Like the account closed after 2 weeks. So yeah, I guess.
Yeah, we didn't lose. Yeah, just to clarify, we didn't lose all the money through trading there. No, we lost it because the account shut down. I probably lost about £100 in trading fake money there because my bet didn't go off for the only one that I made, which was more of a punt than anything. But so
well, I think
guess you won that.
you got a little bit emotional and got a little bit impatient and just decided to take a punt.
Yeah, that was probably. I was like, oh, it's only playing money. Shouldn't have done that. But
yeah. Fair enough, you lost that one. It's a little disheartening though. I guess the amount of time that you have to be looking at these graphs and curves and trends, and that is literally just for one trading technique.
Yeah.
So, I mean, it's certainly a steeper learning curve than I thought it was going to be. I thought we'd kind of see some trends and be able to jump in the trade quite quickly, but
yeah, it just didn't happen like that, did it? I guess the realization is that it might take you six months to a year to really get comfortable doing any sort of technique or analysis or get used to the platform in order to be able to just whiz through it every night. You want to look at your top 5 graphs and then alter them accordingly, but
yeah.
That one kind of just petered out, really, didn't it? A couple of days after it started.
Well, it was certainly ambitious, but I mean, I'd love to try it again. I guess now that I'm aware that the amount of time commitment it would take, I would be. Well, I don't think I was obnoxious about getting involved in it, but I'd certainly like to stay involved and learn a lot more. So we're going to be looking for a new platform. I think you're aware of one or two that might stay open a lot longer. So.
Well, a couple of years back, we opened one when I was back in Atkins, didn't we? We messed around one there.
Yeah.
My account on there is still open. It's still active. I can still trade on that, and that's 2 years later, and it's still all fake money. I've got a more impressive background on that one. I think you started off with 100,000. I think mine currently at the moment is around 360,000. So I'll take that one as a win.
Yeah.
But yeah, we could definitely look into that one, and then obviously I'm going to have to go through the crippling task of trying to lose £260,000 worth of play money to match you at 100,000.
Oh, you could just open a new account.
I could just do that as well. Yeah, could definitely up there.
Right.
But I think maybe we need to do more research and maybe get used to the platform a little bit before we start throwing down challenges willy-nilly and thinking we have a dog's nuts.
Yeah, true. I think there's a steep learning curve before we do the next challenge.
Yeah.
Yeah.
Right. What else have we got? We seem to be rolling through quite a lot today.
Yeah. I mean,
I had done a review of the portfolio top performers there. Another bit of news there that we've got from our portfolio is that British Land has announced it's going to improve its yearly dividend for 2019 up by 3% from last year, so it's moving up to now 32 pence for the year. So the current yield on British Land now is around 6%, I do believe, at the end of today's close.
oh, that's good.
Which is quite an attractive yield.
Yeah.
So British Land owns quite a lot of office blocks, I guess, in London. It's also got some shopping sort of like centres as well. It's basically sort of property portfolio that they run, and then the profits they make from that is they give it to the shareholders and then distribute it out like that. It's taken a bit of a hiding over the last maybe 3 or 4 years when it were up at highs of maybe around £10. Now it's trading at around £5.30, so that's why the yield's so good. But they have progressively upped this yield for maybe the last, I don't know how many years, but it's only ever been going up for certainly at least 5. So if you're after dividend income and a decent yield, then you might want to give that a look. And if you feel like you need to add a property stock to your portfolio, maybe definitely take a look at that.
6%.
Yeah, British Land. BLND, that's its ticker.
So is that FTSE 100?
I think it's a FTSE 250.
250. Fair.
Yeah.
Still.
Yeah. And then other than that, I couldn't find any more regulatory news updates for any of our other 13 stocks that we hold between us. Some of them are duplicates. You've got some of the same company that I've got as well, but it's not in a shared account or anything like that. Just to clarify.
Yeah. I'm not going to ask you to do your book review this week.
Because everyone's heard enough of me already when it comes to speaking this week.
Yeah.
But it is there.
Fair. The book review that he's been talking about for the last kind of 3-4 weeks.
But I said I'd been doing for 3 or 4 weeks. I finally got time to it, and I finally did it.
Yeah.
Finally wrapped it around, and now we're not even going to do it. We're going to put it back till next week.
Yeah, which is fair.
Which is fair. It's fair. What else? What else do you want to talk about?
I don't know.
Anything else you want to throw down there? Any plans going forward?
I guess it'd be interesting to see what does go on with Amariza.
Yeah.
Because obviously I've been talking about trying to get some funds invested in some dividend-paying funds. So if we do see that go quite high, it'd be interesting to see if the person that buys them or the company that buys them actually pays dividends, or whether it's just a sale. And do you know what I mean? Like sometimes they.
I think. I think the board of directors are after a fully cash sale. I don't think they want any sort of stock options. The way you might get, we'll pay you 50% cash, then the 50% will give you a section of our stock. I don't think the board of directors want that. I think they just want a straight up cash sale.
So what would happen to us
in that
regard in terms of being a shareholder? Would it just close at that whatever price it is, and you get that fund back into your account?
Yeah. So So if you've got a bid that comes in at say 40 pence, and the company will give you 40 pence for every share that you own in your account, and then you get that in cash, and then your shares just go off to the bidder, and then you have that cash in your account, and you can stick in your dividend stock if you want. I mean, which dividend have you got your eyes on? Any particular dividend stocks that you're after?
I think British Land.
You get sold it so well.
6% yield. I'm happy with that.
Well, what's your strategy have you got any good strategy, or are you just going to let it run its course and just take whatever offer eventually comes in if it gets accepted for Mauricio? Because I mean, you were mentioning the other day that you were thinking about maybe jumping out around 17, 18 pence just so you could then stick it into a dividend yield.
Well, no, I said because I bought it in at about 17 pence. So I'd obviously want it to be much higher than that. But if it did go high, I think I'd like to. Well, that's what I'm saying to you. I don't really know what the game plan is there, so I guess I'm getting your feel for it.
Are you going to stick around to the end and see what the final bid comes in at, or do you think you're going to maybe take some profit halfway through it and top slice it as it keeps going up, just to bank it, just in case it all falls through at the end, which is a possibility?
Yeah, I mean, I guess I could take what I can get, let's say, it does go up to say 34p or around that mark, then I
Yeah.
can cash out and still have 50% of everything left.
I think it might be worth putting in some stop losses as new bids come in, just in case it does collapse.
Okay.
Then you're not going to.
Well, I think there's
for example,
a 28-day bidding
36
period,
pence.
isn't there?
I think it's 28 days, and then they're allowed to extend it every 10 days that a new offer comes in or something like that. I've not read the finer detail of the whole offer. But, yeah, I think I might stick a stop loss on every time a new bid gets in, just in case it does fall through at the end and it drops back down to its pre-bid levels, which were down at 12 pence. Obviously, if you've got a stop loss in there at 30, then you're not going to lose it all this profit that you can bank. And then you can just buy back in at 12p again if you just think that they're going to do the same thing further down the line and people will come back to the table.
Yeah, true.
Because there is a possibility.
I think I will. I'll look for around that. I think 34 would be a good price for myself, but.
Oh, so you're looking for a 2x, are you?
Why not?
Or is that a 1x? I think 1x. Yeah, double your money.
I'll see.
Yeah, I think 32 would do me as well. I mean, my average is down at 14p.
So you'd only need 28.
So that'd be decent. I need 28 for a double bagger.
Fair enough. But yeah, I guess that's my strategy. Is if that sale goes ahead quite quickly, that would be great. Because then I can get that invested into something that's going to pay me a dividend. Because that's where my portfolio is quite. I feel like it's lacking.
Poor.
Yeah, it's poor. Yeah.
Yeah. I think I definitely got a bit too excited with regards to capital growth as opposed to dividend growth. I'm still getting a decent amount of dividends, don't get me wrong, but as we discussed, we had a couple of text messages of a week, and compounding is king as opposed to chasing fluttering riches, right?
Well, yeah, there's a certain amount of risk you want to take to kind of you want to have enough risk that if something does go big, you make enough money, but not so much risk that you're actually losing out by not compounding any interest, which is the position that I feel
also
like
want
I'm
something
in.
that's exciting as well. Yeah, fair enough. I want something exciting just to keep me interested as well. So this has definitely been a long wait, but it's finally paid off. So we'll see how far it goes.
Good. Right, I think I'll call it there then. Yeah, for tonight.
What's your final prediction on tomorrow? I want a name. Who are you going for?
I also think Boris will get it.
Are you going for back in the favourite?
Well,
Big
he kind of wasn't he kind of earmarked previously before Theresa May got it, like as a maybe, and now he's up for it this time.
Oh, he fancies it, does he?
Yeah, I reckon it'll be Boris.
Yeah, I reckon it'll be Boris as well. And then what he actually does will be very interesting because he's promised a lot already, and then whether or not he can deliver that, whether or not he even gets a chance to deliver that, is all going to be interesting stuff. And obviously that elusive date of the 31st of October for when we leave the EU is getting closer, and we're still nowhere near
having a decision.
Yeah.
Or
it's been put on hold
basically
for the last 6 weeks, hasn't
it? Yeah. All right. Well, thank you very much for watching. We've had quite a few people in the chat tonight, so yeah, thank you for all those.
Yep, thank you very much. Sorry I couldn't reply to any of your messages apart from the Donald Trump lookalike, which I still maintain I need a bit more tan.
Yeah, definitely not orange
tomorrow
enough.
It's supposed to be 31 degrees, isn't it? So maybe I can just stick my head out of the office whilst I'm doing my work, get that nice little glow on my face, and come back next week.
Yeah.
New man.
In true Donald Trump style.
True, make the office great again.
Right then. Thank you very much. Good night.
Thank you very much. Take care. Bye.